Let's shift focus then to the earnings corner, and the stock on our radar is eClerx, buzzing in trade on the back of a decent set of numbers as far as the operational performance is concerned. The management commentary, however, for the fourth quarter was slightly circumspect. So to get more details, we have Rohitash Gupta, who's the CFO of the company, joining us on the show. Thanks a lot, Rohitash, for joining in. You know, your revenue growth, constant currency revenue growth, has recovered or entered positive territory after 2 quarters of showing a decline. In that case, what is the outlook going ahead, and what do you project for the fourth quarter? You said that the fourth quarter is likely to be soft.
Good morning, Nigel. Thank you for having me on the show. Yeah, Q3 turned out to be very, well-rounded performance both on revenue and margin front. However, what we are seeing towards Q4 is that, much of the $1.7 billion quarter-on-quarter expansion that came in Q3 was due to one-off factors which will no longer be there in Q4. We are seeing increased activity on the RFP deal front. However, some projects or decisions are getting delayed. So I think a mix of factors because of which Q4 is going to be very, very soft. However, some gains on the margin front will actually to sustain in Q4 and onwards because there are structural change in our cost base.
All right. So Rohitash, we're going to probe you again. This is Nigel this side. As you said, there were a whole lot of one-off factors. If you talk about the FTA pricing, the CLS acquisition, the seasonality factor played out there, and various deals as well did get completed in the last quarter. But we want an outlook. Say quarter 4 will be soft, but give us some kind of guidance in terms of constant currency growth for FY21 that you will be looking at, and also if you could give us a margin band that we could work with going ahead.
So I think, on the growth front, the challenge that we are facing is on the offshore side of the business, which is roughly 75% of our revenues. And there we have not seen any growth for last 1 to 2 years, right? And in terms of outlook going even into next year, we think that, offshore growth will be something to watch for. We don't have any clear visibility in terms of what the retention rate will be because rollouts have been a big problem in that book of business. Onshore growth has not been a problem at all. It has been chugging along very well at 14-15% YOY growth. So all put together, I think if the industry sees, mid-single digit kind of growth, that's what our hope and aspiration will be going into next year. But too early to say. We are still into our internal budgeting cycle, and I think March will be the closure of that, where we get a little bit better visibility on what next year will turn out to be. On the margin front, I think YTD EBIT, if you look, has been about 20%, EBITDA has been about 25%, and I think that's fairly stable, especially given the commentary that I said that some of the margin levers that you saw playing out in Q3 will hold good and hopefully will also offset the wage hikes coming into Q1.
All right, margins likely to be around that 20-25% mark. Thanks a lot, Rohitash, for joining in. Though, if we can, just, before we let you go, tell us, you have almost 700 crores of cash on your books, which is roughly 196 rupees per share. You've done a buyback in the past. The stock price is half from the top. You consider another buyback soon?
We will decide on that internally by March, and I think once the 12 months are over, which will likely to happen in the Q4 results, we will announce the way and instruments we will use to distribute the cash. Our policy remains that, in trailing 3 years, the cumulative PAT of 3 years, about 50% of that we like to distribute to shareholders, and that remains same.
And any possibility of some acquisition?
So acquisitions also, we always look out for, and at any given point of time we are looking at some of the other assets. We have been cautious on that front, and we will remain so. But short answer is yes, that there are few opportunities which have been there, which are there, but we will evaluate them very closely before doing anything.
Said that the last time as well. Let's hope that something does get closed out. However, wishing you all the best for FY21 as you're guiding to us that FY20, the fourth quarter, will be a little weakish, but you're optimistic maybe things could improve going ahead as well. Thanks so much, Rohitash, for joining in and filling us in with all those details. Well, we'll slip into a short break. You come back. We continue our